Hello and welcome to the weekly wraps. This has been the first full trading week of 2015 this week, and it hasn't perhaps been the busiest start to the year, but nonetheless there have been a few key trading themes. So firstly, I'm just going to start off with the ECB. So we did see those comments from Draghi last week in Handelsblatt, increasing the appetite for potential QE programme in the upcoming meeting on January the 22nd. And further to this, early in the week, we did also see Dutch press report that the ECB have three potential options in conducting a QE programme. So this very much lifted the appetite for a QE programme throughout the start of the week. However, towards the week, we have seen a bit of a dissipation and some relatively mixed messages come out of the ECB. So we did see ECB's Coué, who did warn against pulling the trigger too quickly on a QE programme, particularly given the political uncertainty on Greece, which has also been a key focus for participants this week. And furthermore, the latest source comments today did reveal that although the ECB has put together a potential package of 500 billion euros of investment-grade bonds, that the ECB has made no concrete decision as of yet. So that's something to bear in mind with the weeks as we draw closer to the ECB's next rate decision, which is due on January the 22nd. And elsewhere in equity markets, WTI has been one of the main catalysts for direction this week. So once again, we've seen further downside for both WTI and Brent crude futures. So we have also seen Brent break below that $50 per barrel level for the first time since 2009, as OPEC refused to cut production despite the fall in oil prices, with some of these comments being reiterated by the UAE oil minister. In terms of the FOMC minutes, this was relatively a non-event, not too much of a market mover at all, with a lot of the comments from the minutes just being a reiteration of those made already by Yellen in the press conference that followed the last rate decision. And from a data perspective, the main release this week was that of the non-farmed payroll report. So that came at 252,000, above the expected 240. Unemployment fell to 5.6 from 5.8%. However, there was some definite weakness in those average hourly earnings components. But net, it was a relatively mixed report, and also, in the grand scheme of things, there hasn't been too much of a sustained market reaction. That says, in the grand scheme of things, this isn't too much of a game changer for Fed policy, particularly with participants now looking towards the latter stages of 2015 until the Fed does begin to lift off rates. With this sentiment also being echoed throughout the week from the likes of Fed's Evans and Fed's Koch-Lakota, who did warn about rate lift-off within 2015, saying that 2016 would be a more likely timeframe, although do note these are two of the more dovish members of the FOMC. So that's all from me, and I hope everyone has a fantastic weekend.